Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come.
Yeah, Friday. What's up, everybody? Friday morning. Welcome to the Friday morning edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys have had a great week as we are wrapping up the week. Markets are down a little bit this morning after yesterday's early day sell-off, but not overly surprised at yesterday's sell-off due to the fact that we saw the slowing momentum and we were looking at a potential breakdown as an opportunity to enter the position. So let's go ahead and dive in. Real quick announcement: if you are a Traders Army, a free Traders Army member, you get access to our free preview week for our live trade room. So we'd love to have you join us in our live trade rooms the first week of March. So March 1st through March 8th, we're going to be doing a free preview week at TradersArmy.com. Open up the doors, let you in, let you see what our live trade rooms are all about, and then get you access to our trade feed where we actually where we post any trades that we find from an options perspective, as well as the updates. The daily market commentary comes out in the morning, and then any updates are added to that update page. So, all right, let's go ahead and dive right in. So on the ES yesterday, we can see that we had a breakdown level here at this particular area. Now that breakdown level here there was two potential entries. One was a reversal, the other was a breakdown. The reversal up here at this 3388 area, I had put that in as a confirmation entry, primarily because we were in the context of a bigger picture downtrend. And so in the context of a bigger picture downtrend, you typically look for confirmation entries for reversals. And then price hammered through our breakdown level and just really blew right through this little 15-minute area of demand. So we were correct on the fact that the market was going to go down. The frustrating part is that with the confirmation entry, you didn't get filled up here, and I didn't have quality enough basing for this area in here. And so, unfortunately, this thing was riding down, and because it didn't follow my rules for an entry, I wasn't able to nab it. I know a lot of traders did, but my rules are pretty specific. I'm not going to take a trade unless it's a limit entry up here, because this didn't trade halfway into the zone. So unfortunately, that was really the setup yesterday. And then we came down to our next area of demand, and we just kissed it and moved ourselves up out of that level. But what I want to point out here, and so let me switch this now to a confirmation, since we came very close to that level. What I want to talk about now is notice how much this breakout area, old areas of support, will oftentimes act as new areas of resistance. And what I mean by that is that the area that we had as a breakdown level, look at how perfectly it acted as a resistance level coming higher. And you don't oftentimes hear people talk about support and resistance as much. But support and resistance is a real thing, and we do want to look to see where it's valid. And so I talked to a couple people that got in later in the day on the short in order to take this thing and ride it down. So now what am I looking at for this evening? So what I'm looking at for this evening is I need to identify, or this evening, for today, when I look at the 4-hour chart, I don't technically still have a lower swing. I have a lower swing low here by this being there. I don't technically have a lower swing high as of yet. So shorts are okay to take with a little bit more confidence, but I still don't want to just go jumping in willy-nilly, if you will. I will say that we're putting in a little bit of of this kind of a picture, and this oftentimes will break out to the downside. So keep that in mind, right? This oftentimes this kind of thing will oftentimes break out to the downside. We are seeing a lot of selling pressure on these candlesticks here, and so I think there's a chance this will break out down, and you might be able to get it as it breaks out here to the downside. I don't love any of these reversal areas up above me. This one here is not too bad. Time of day is not the greatest. It's market close time of day, not the greatest, if indeed we do break up here. So there's a chance that I really just won't do a whole heck of a lot today in the equity markets unless I get a quality breakdown. breakdowns to me seem to make the most sense. And if we do break out to the upside, then I will probably want to look for a reversal opportunity when we come back into it. In the Nasdaq, very similar picture. So I'm going to erase those levels. Very similar picture. We had a confirmation area here that we blew right through. So we were looking for, if we wanted to stay long, the Nasdaq was the way to do it. But the Nasdaq also broke through, and that's why that was a confirmation long. Let me put it back in there. So the Nasdaq also broke through, and when the Nasdaq broke through, the S&P was also going down. So they all fell. The Nasdaq being the one that fell probably the least yesterday throughout all that stuff that was going down, as it's our strongest market, right? So you don't want to short the strongest market typically. And so if we come back up, the Nasdaq would be the one to look at. But right now I don't have any quality zones to lean on and anything to jump in for. So I'm just going to hold off on the Nasdaq as well. Crude oil. We did get a nice little breakout area up here. Price broke out, got to its target, so we got a little long on the crude oil breakout. The short, which we believed held, now remember where this short came from. This short came from the fact that we had a double bottom right in here, and we talked about this double bottom. The measured move of this double bottom is from here to here, right? As we can see that this is a little bit of a W. So if I duplicate that, and move it up, you see exactly that we hit the measured move and then sold off right from there. The measured move on this oil play worked out perfectly, and it's actually coming down now from that zone. Now we did come down and through this little 15-minute area of demand, but this area of demand told you not to get in anyway. And why did it tell me not to get in? Well, basing is the kiss of death before a level, and this is what we got. We got basing before the level. So anybody who understands basing before the level knows this is not where we want to be. We want to make sure that we remove any of that basing before we would get in. My next kind of area of quality demand is down here, but that's a terrible time of day. So I've got to look down in this region here for our next area of potential demand. Might we get a breakdown today? We could get a breakdown from this area above 5270, provided that I get a little bit of basing. Next would be gold, and gold just is continuing its rally. No big surprise that the rally in gold has continued with the weakness in the S&P markets. You know, we're seeing gold rally, we're seeing bonds rally, and gold is continuing its rally. Keep an eye on this little pinching area that we have here. This gold rallied really hard in the overnight, and a lot of it is on fears of coronavirus. So we're seeing that, you know, as a global thing right now, as this has room to continue to run up. Next, looking at our bonds and currency markets. In our bond market, we had a breakout trade, and while we were in our live trade room, we talked about the fact that we needed 1 or 2 more candles before the breakout, and we did get those. So we got basing in front of the level. Price broke out 1, 2, 3, 4, 5, 6 candles later. It had gone basically nowhere. So at that point, you take your stop and move it to break even, and then lo and behold, boom, it continues to hit its target. So that's exactly the best way to handle the 6-candle rule. Move your stop to break even after 6 candles, so that you don't risk taking a loss if it comes down against you. However, it still gives you the opportunity to go up and hit your profit target. So this one hit our profit target, wound up being a really nice trade for anybody that took that piece. And now if we get a bit of a pullback, you could have an opportunity somewhere down in here. A lot of this happened in the overnight last night, so the demands are going to be a bit weaker. When I go to a 15-minute chart, there's just not a whole lot in here that I'm in love with, frankly. There's no other way to put that. There's no levels in here that are making me jump up and down, saying that there's a lot of great opportunity. So I'm gonna hold off on this one. Inside the Aussie, we're seeing a very strong move down in the Aussie. No surprise, no change to what we've been doing and what we've been talking about. Those people that have been riding this downward move, which we've talked about for a while, have been, pretty much richly rewarded, if you will, as it's got really, I go to the weekly chart. Heck, let's go all the way out to the monthly chart on the futures contract. And what you'll see is that we don't really have, there we go, any quality demand until we get to these all-time lows, if you will, from the monthly contract. And so we're continuing to drop a lot of falling prices from this point. So we want to look for opportunities to get in. The problem we're running into now is that in order to get in, you're not getting any quality rallies up to supply. You've got to wait for a breakdown, and that's what we would be looking for in here. In the euro, so the euro has also been very bearish, continuing its move down. And yesterday we found a little bit of basing in here, and it popped up. We had a little supply level in case here, so this one was a small stop out relative to risk. So overall, we're still bearish. This looks like I affectionately call this the beginning of what I call the Batman cowl trade. This looks a little bit like if you were to imagine that Batman's eyes are somewhere down here. This is the top of his mask, and so I always look at that as when I see these upper wicks just like this, and I see that price has spiked in a similar area. To me, that's a very strong bearish signal for price to continue moving. So we had that little stop out on the 15-minute level, but I'm still definitely more bearish than I am bullish on this thing overall. Looking at crude oil, the Canadian dollar. The Canadian dollar, we had a little supply level in here yesterday. Price popped right through that level. May or may not have stopped you out based on where you place your stop. Your stop at least had to go above this pivot. More than likely got you on a little stop out. And then it came right back down and I want to say this was on inventory announcements, on storage. And then now we're kind of just jumping along sideways here. And so I still think the better probabilities are for price to continue to trade down. It's just having the ability to kind of stick it out. There's nothing wrong with waiting on the sidelines for it to start to create a better trend and then getting short on a reversal. Great British Pound and Japanese Yen. So the Great British Pound, we had a nice little move off of our demand area as price came in and hit our little demand area yesterday that we had identified for a potential reversal. 1, 2, 3, 4, 5, 6 candles later, it had gone nowhere. Nice little move up. You had a little bit of supply up above us in here that the market hit for an eventual price target, but we rallied really hard off that Great British Pound demand area. And that demand area, if I go back, was one that we had seen in the past. So that was not a demand area that we had just recently drawn. It was one that had been there a while back. And if we go all the way back on the 4-hour, it's this area all the way down in here. Matter of fact, maybe I should just go down on the 1-hour. If I pull that on the 1-hour, we can see what the shape was. It was this little wick over wick area here. And then price came in, retouched it, and we've gotten a pretty nice move away. So keep an eye on this area up here for the next potential reversal, which we're coming close to. We're not quite there yet, but keep an eye on this area up here for a potential reversal. And then the Japanese yen, we had a huge trade on the breakdown. Let me know if you took the breakdown trade on the Japanese yen. That was, once again, on that coronavirus news in Japan. And we saw that big sell-off. So if you took that breakdown, that was a very strong move away. We now have an area of supply up above us. We came super close to in the overnight hours, did not get the fill, and so now that needs to switch to a confirmation entry. Remember, if I come close to a level and don't get in, I switch it to a confirmation zone. So we are heading into the weekend. Futures markets are closed over the weekend, but we're seeing a fair amount of weakness overall in the markets. The U.S. equities are showing us, I say a fair amount of weakness. I mean, that's very relative, right? It's relative to not going up at the fastest rate possible. It's just a small pullback. But just be aware that you do take gap risk over the weekend in the futures markets that is increased. So if you don't know how, you should probably look to options on futures as a way to potentially protect against those gaps. So if you have any questions, please feel free to give me a holler. I will talk to you soon. Have a great day.